Stop what you are doing right now because something just shifted in the gold and silver market that most people are completely misreading. Every silver bull market ends the same way, not with a quiet slowdown, not with a gentle top, but with confusion, with people asking what just happened. Because right now in 2026, something very familiar is starting to unfold. Silver is moving, attention is rising, new investors are entering the market, and if you've been around long enough, you've seen this before. The excitement, the confidence, the belief that this time is different. But here's the uncomfortable truth. Most silver investors are about to make the exact same mistakes they made in the last cycle, and the cycle before that. Not because they're uninformed, but because markets don't just test your knowledge, they test your behavior, and behavior tends to repeat. So in this video, we're going to break down exactly why investors get this wrong every single time and what it looks like. Welcome back to John Forecast, where we decode the macro forces behind the gold, silver, and global market moves. Let's zoom out for a second. Because if you only look at silver day to day, you'll miss the pattern entirely. It always starts quietly. Silver moves up slowly. Almost nobody is paying attention. Then it accelerates. Prices start rising faster. Then comes the breakout phase. Prices move aggressively. Media starts covering it. YouTube videos start popping up. And suddenly, everyone is paying attention. The biggest mistakes don't happen at the beginning. They happen after the first big move. Because that's when emotions take over. Let's talk about the first mistake, chasing. It starts when silver moves from 30 to 50, then to 80, then suddenly it jumps to 100. People who ignored it at 30 start paying attention at 100, not because they understand silver, but because the price forced them to notice. They buy because they feel urgency, driven by fear of missing out. FOMO. This is where things get dangerous. After they buy, the market pulls back. Not because the bull market is over, but because markets don't move in straight lines. The same people who felt confident at 100 feel uncertain at 80. They start questioning everything. Did I make a mistake? Mistake number 2, selling too early, the weak hand trap. They sell because they feel uncomfortable. Bull markets are designed to shake you out. Every major move up is followed by pullbacks of 10, 20, or even 30%. Pullbacks remove people who don't have conviction. They transfer assets from emotional buyers to patient holders. The emotional loop. Excitement, fear, relief, confidence, panic, regret. It feels rational while it's happening, but markets reward discipline. Experienced investors expect volatility. They ask, has anything fundamentally changed? If the answer is no, they hold. In a bull market, pullbacks are part of the process. If chasing and weak hands are the first traps, the final one is overconfidence. Mistake number 3, overconfidence at the top. Let's talk about the final mistake. And this is where the most damage happens. Overconfidence. Now this one is subtle because it doesn't feel like a mistake. It feels like success. By this point in the cycle, silver has already made big moves. $30 to 80, $80 to $120, maybe even higher. And the same people who were unsure earlier now feel certain. They've seen the market go up. They've experienced gains. They feel like they understand how this works, and this is where everything shifts, because confidence slowly turns into belief, and belief turns into certainty. They start thinking, this isn't just a bull market, this is the beginning of something massive. Silver isn't going to pull back anymore. This time is different. And that phrase right there has destroyed more investors than almost anything else. How the top forms. Now here's how the top of a bull market usually forms. Not in a single day, not in a single moment, but through a series of emotional shifts. At first, prices rise steadily, then faster, then aggressively. And then something changes. The moves become extreme. Daily price swings get larger. Media coverage explodes. Everyone is talking about it. Even people who have never invested before start asking about silver. This is the late stage. And here's what most people do at this point. They go all in, they increase their position, they stop thinking about risk, because now they're not afraid of losing money. They're afraid of missing out on even more gains. And that fear is what locks them into the top. Here's where the final mistake happens. They don't take profits, because in their mind, why would they? The market is strong, momentum is high, everything is pointing up. So instead of securing gains, they hold everything, waiting for even higher prices. And sometimes, for a short period, they're right. The market continues higher, which reinforces their belief. But then the market slows. It doesn't crash immediately. It hesitates. It becomes volatile. Up one day, down the next. And people start to feel something unfamiliar again, uncertainty. But this time, it's different from before, because now they have gains and they don't want to lose them. So they hold, telling themselves it's just a pullback, just like before. But this time, it's not. The reversal. The market starts dropping. Slowly at first, then faster, then sharply, and suddenly, everything changes. The same people who were confident at the top now feel trapped. They watch their gains shrink, then disappear, then turn into losses. And this is where the most painful realization happens. They didn't lose money because silver was a bad investment. They lost money because they didn't understand the cycle. They chased late, they sold early, and then held too long at the top. The full cycle, connecting everything. Now step back and look at the full picture. It always follows the same sequence. At the beginning, nobody cares. At the breakout, some people notice. After the first big move, people chase. During pullbacks, they panic and sell. As prices rise again, they re-enter. And near the top, they become overconfident. They hold too long. And then they experience the full downside, not because the opportunity wasn't real, but because they didn't navigate it correctly. What smart investors do differently. Now here's the key difference. Smart investors don't try to avoid the cycle. They understand it. They expect it. They prepare for it. They don't chase after big moves. They build positions early or during consolidation. They don't panic during pullbacks. They recognize them as part of the process. And most importantly, they don't get carried away at the top. They take profits. They stay disciplined. They manage risk because they know something most people ignore. Bull markets don't last forever. The part nobody talks about. Here's something most people never stop to think about. If this pattern repeats every single cycle, why don't people learn? Why don't investors just adjust and get it right the next time? Because the market doesn't just move prices, it manipulates perception. Let me explain what I mean. Every bull market creates its own narrative. At the beginning, the narrative is weak. People say, silver is dead. Then prices start rising, and slowly, the narrative begins to change. Now people say, maybe something is happening. Then the breakout happens. Prices move fast. Now the narrative flips completely. Suddenly it's silver is the future. This is just the beginning. $200 silver is coming. And here's the key insight. The narrative doesn't lead the market. It follows it. But to the average investor, it feels like the narrative is guiding them. So they trust it, they believe it, and they act on it. That's why most people enter late. Because they wait for confirmation. They wait for the story to feel real. But by the time it feels real, the move is already well underway. The social proof trap. Now let's go one level deeper, because it's not just narratives, it's people. When nobody around you is talking about silver, it's easy to ignore it. But when everyone is talking about it, it becomes impossible to ignore. Friends mention it, social media is filled with it, YouTube is recommending it constantly, and suddenly it feels like you're missing something important. This is called social proof, and it's incredibly powerful, because humans are wired to follow the crowd. Not because we're irrational, but because historically that behavior kept us safe. But in financial markets, it does the opposite. Because by the time the crowd is fully engaged, the opportunity is no longer early, it's crowded. And crowded trades don't reward late participants. Now here's the hardest part of all. Doing the right thing in a bull market feels wrong. Buying when nobody cares feels uncomfortable. Holding through pullbacks feels risky. Taking profits when everyone is bullish feels like you're leaving money on the table. Everything about smart investing feels counterintuitive. And everything about emotional investing feels natural. That's why most people struggle, because they're not fighting the market. They're fighting themselves. Let me simplify this entire cycle into one idea. There are only two types of participants in a bull market: those who react and those who prepare. Most people react. They wait for price movement, they wait for news, they wait for confirmation, and then they act. But by then, they're always late. The second group prepares, they study the cycle, they understand the patterns, and they position themselves before the crowd arrives. That's the difference. Now bring this back to where we are today. 2026 is not the end of the story, it's the middle, which is the most confusing part. The trend is clear, but the direction isn't always smooth. The opportunity is still there, but the emotions are stronger than ever. This is where most people lose their edge, because they start overthinking, they start reacting, they start doubting their own strategy. And that's exactly when discipline matters most. So instead of asking, where is silver going next? Ask, how am I going to behave? Because the movement is inevitable. Volatility is guaranteed. Pullbacks will happen. Rallies will happen. The only variable is how you respond. And once you understand that, everything changes. You're not trying to predict every move. You're operating with a plan, with awareness, with control. Let me leave you with this. In 2026, silver is setting up for another major move. The opportunity is real, but so are the traps. History is clear. Most people will get this wrong. They'll chase when they should wait. They'll sell when they should hold. Don't let that be you. The market doesn't just reward knowledge, it rewards discipline. Stay aware, stay patient, stay in control. Because in the end, It's not the market that determines your success. It's how you respond to it.